Hey traders, what's going on? Jamie Setley here. It is March 5th, 2020, and just a quick update here on the dollar index and euro. Dollar index is starting to break down. This is the dollar index right here. Um, I actually want to kind of show you how I would go about trading this. So one, we've got the 2019 trend line. So January, June lows, right? Went back there, thought we were trying to break, or we were trying to break down back in late December, early or this year, and of course came all the way back, went to a new high, kind of double topped it, and now we are back below this line. So here's the thing: it's always tough to kind of chase a move, right? So like in this case, you'd be chasing weakness. You feel like you're selling low and whatnot, and you're at risk of a, kind of selling the bottom. Well, that's where points of reference come in. So in this case, we're talking about using a median line, right, or a pitchfork. Many different names for this, but pitchfork, channel, what have you. And in this case, you can kind of see you have a point of reference. So this is a daily chart. I'm gonna go to a 240-minute chart. Okay, so you can see what happened yesterday. Bounced off the line, came back, tagged that level, right, that center line. That gives us a point of reference to trade against. Okay, so that's your risk. Now from here, right, you could come back a little bit, back up into resistance or something. I would actually look at this line right now as as resistance. That's going to be 97.12, and then you're stopped out above 97.59. And really, your target area where you're looking for this to go is towards this lower parallel, which actually, let's go back to the daily chart, which is going to coincide with this well-defined horizontal level at 95.15, right? You've got highs here from November 2017. That level was actually support back in January of last year. So huge reward to risk on this, right? Again, 97, let's say 97.10, let's call it 50 points of risk, and you are looking close to 200 points on the downside. That is like 4 to 1. That's a pretty good ratio, right? So most people probably trade this through euro, right? So let's go to euro. So in the case of euro, let's call it 1175 as support at this point. And really your risk is probably down to about 1120. And this is a little different technique, but you can see it's not quite as similar or the same as DXY, I should say. You have a channel right here. Okay, the channel, you can see we traded perfectly between these levels on the channel, right? So when that happens, you're looking for, when you break out of the channel, you look for the market to move to the width of the channel extended to the top side of the channel, or if it's the bottom side, you're looking for a drop to that level. So in this case, that actually coincides with the high from January of last year, which is going to be 115.70. Okay. So, we're talking from here, 370 points up, and really you're talking 80 points on the downside. But if you can get 1175, you're looking at like 55 points on the downside. So again, really good reward to risk. And that is a quick kind of run through on what's happening right now with DXY. Have a great rest of your day. All right, bye.